And it's on. So welcome everyone. We were just talking about the trading plan builder file and webinar that I will host on Wednesday, on next week. But I just wanted to start recording because if you miss this session and you are not here live, I just want you to hear this. So on Wednesday, I will host the trading plan builder session. I was working on this file the whole weekend long. I was working on this the whole weekend long. And yeah, it will be hosted on Wednesday. And as I said, before I started the recording of this session, you will have to backtest a lot of this file. You will have to backtest a lot because if you like to have a working trading plan, a working trading edge, you will have to backtest a lot. In order to build this trading plan, criteria, etc., you have to backtest the entry types. You have to backtest each pro-trend trade, each counter-trend trade, etc. So just be prepared for this. But yeah, actually this file won't be nothing new under the sun because I've already told you everything. So basically this file will be just put it all together of the information that I told you earlier in the webinars, in the recaps, in the, for example, markups, in every single content. It will be put it all together file and it will be put it all together webinar. But there will be listed criteria. So all of the criteria will be listed, all of the base criteria will be listed for each entry type. So there will be like a base plan. Here's a base, and from the not baza base. So there will be a base, and for each pro trend and counter trend trade, so we'll have a counter trend and pro trend. We will have base criteria for each of these trades. So we will have a base criteria for the counter trend trades. We will have a base criteria for the pro trend trades. So without the base criteria, you won't be able to take a trade. If the base criteria aren't meet, so doesn't meet, then you won't be able to take a trade. So for each of these types, there will be a base criteria. And let me tell you, for the pro trend, for example, there will be 4 base criteria. You will have to have 4 base criteria in order to search for pro trend entries. And if you have these 4 base criteria for the pro trend entries, then you will have another 6 variable criteria. So you will have 6 variable criteria and 4 base criteria. If the 4 base criteria are met, then you'll be able to look for entries. You'll be able to look for the entry types, and you'll be able to apply these another 6 variable criteria. And you'll have to backtest it for yourself that which 6 criteria or which 10 criteria combined together are working the best for you, because we have to have these 4 criteria for these 4 base criteria. And after the 4 base criteria are met, you can search and look for 6 other or 2, 3, 4, 5 criteria from these 6 criteria. And you will have to backtest it for yourself. But yeah, let me tell you something that it will be good. It will be very lit. And yeah, I believe it will be very, very, very helpful for you. And you'll be able to assemble a working trading plan because most of you guys are lack of a trading plan, right? Most of you guys doesn't even have a trading plan and you are trading without a plan. But with this file, with this webinar, you'll be able to assemble a trading plan, a working trading plan. And sorry, I just forgot to tell that we do not have just base criteria, we have a base plan. So we have a base plan too. And the base plan isn't new. The base plan is basically trading based off the 15-minute and 5-minute zones following the counter trend or the pro trend trade. So this is how this plan will look like. Everything will be told in that file, and I will tell you everything in that webinar because I will host that webinar on Wednesday, as you know. And yeah, I believe it will be very, very, very helpful for you to actually assemble a working trading plan. And yeah, I'm looking forward for this session because I'm really looking for the improvements of you guys, because this session and this file will most definitely improve your trading and your achievements. So yeah, let me just ask one more question before we start the backtesting session. That, as I told you, most of you guys doesn't even have a trading plan. So if you have a trading plan, no. Yes or no? Do you have a trading plan? Please just circle the right answer. The question is, do you have a trading plan? A proper trading plan. So yeah, you see, that's what I was talking about. Mainly, most of you guys doesn't even have a working, or not even a working, just a simple trading plan. Most of you guys doesn't even have a trading plan. But with this file, you'll be able to actually create a trading plan for yourself. And it won't be fully personalized because there will be base criteria. And there will be base criteria for each entry type. So for the pro trend and counter trend trades, but the variable criteria will be personalized. They'll fit your own needs. So yeah, once again, I'm really looking for this session. I will just work nonstop till Wednesday, to be ready with this file and to be ready with webinar. I have to get my thoughts together and I have to assemble this trading plan. The PDF, because there will be a PDF too. And yeah, I will be working nonstop to get ready with this file, and it will be hosted on Wednesday. I don't know if it will be before the New York session or it will be hosted after the New York session, but we will see. More likely it will be hosted before New York starts, so around 2 hours before New York starts. But yeah, let's not waste more time and just hop into this backtesting session. And let me just zoom out and see the whole chart. Okay, let me just generate a random number, and random number generator. Okay, and we will test a random day from June, because it's 10th of July. We will test a random day from June. So from the 1st of July, June to the 31st of June. Yeah. So let me just generate a random number. And it's 17. Not 17, sorry. What am I doing? Not 41, 31. Okay, generate. Okay, it's 11. 11. Let me just see. 11. Oh, that's a Saturday. Yeah. 11th of June is a Saturday. Yeah. Can you confirm? Yeah, it's a Saturday. Okay, let me just generate one more number. Sorry, guys. Bear with me, please. 20. Okay, that's a Monday. Okay, perfect. So we are going to backtest the 20th of June, and let me just see. Let me just search for the 20th of June here in the Forex Factory economic calendar. 20, June 20, apply settings. Okay. What? Wait, guys. Oh, it's 2021. Sorry, guys. Sorry, guys. Sorry. What is happening right here? What am I doing? Can you just tell me what am I doing? June, right? June. Yeah. 20th of June, Monday. Let me just check it again. 20th of June. 20th of June. Yeah. Okay. Here it is. So on this day, there won't be any high impact news. There won't be any upcoming high impact news. So we'll be able to trade freely without any doubts. And let me just search for the 20th of June on the charts. 20. Here's the 20. Okay. Here's at this region, there's the 20. And I will replay it before New York starts. And let me just remove all drawings from this region and from here too. Okay, so sorry it was taking a very long time, but here we are, guys. Let's just start the backtesting session on the 4-hour chart. Okay, so once again, welcome everyone. It's Marcel here, and I will break down the 20th of June. And we will start on the 4-hour chart first, and we will create a top-down analysis first from the 4-hour to the 1 minute. So first on the 4-hour, what can we see? Of course, we know that the higher time frame trend is extremely bearish, right? We talked about this several times in the previous sessions. We already know that the higher time frame trend is extremely bearish at this region. So the daily, weekly, monthly is showing a bearish pressure. Okay, we know this, but let's just take a look at the current price action region at this current leg. And let's see how price action is actually doing in this region. We can see that at this region, it was pre-marked from months ago. So I just kept it on my chart. Yeah, we can see that price has broke below the demand zone at this region. Let me just find the demand zone. I believe it was somewhere around here. Yeah, it was a demand zone. It was an extreme daily or 4-hour demand zone that price just broke below. And as you can see, a break of this demand zone has basically happen from this zone. But we already know that this is a daily zone because we've talked about this several times in the previous webinars, but I will just show you that it was a daily buy to sell candle, sell to buy candle. So as you can see, this was the last recent daily supply zone that price was just reacting on. Let me just switch back to the 4-hour chart and let's see what's happening at this region. So we already know that price has reacted on this 4-hour zone, created a bearish structure, changed back the character here to the upside. As you can see, here was the character changed back on the 4-hour chart, and price has just formed a bullish structure up to this supply zone and reacted on this daily supply zone strongly. As you can see, here was the bullish pressure showing up, coming up to the supply zone, and after a supply reaction, price has just changed character here to the downside at this low point, and after the change of character here, price has just strongly changed character here to the downside. So strong change of character has happened at this line on the 4-hour chart. So it seems like the trend has changed at this region, and even after the change, price has just built up liquidity. As you can see, here's the first tap, second tap, third tap, real tap, referral tap. So it was a liquidity line, or this was the liquidity line, and price has just went up to some sort of supply zone at this region, reacted on it, swept the liquidity, and started a bearish pressure to the downside. So this is how it looks like currently. Sorry guys, let me just ask you something, or yeah, let me just tell you something that please, if you have any questions in this session, just raise your hand or type your questions in the chat, and I will let you know if you can ask your question. So please just don't interrupt me. Don't use your microphone if I'm not asking you to use your microphone. And yeah, if I will be asking questions. So I will be asking questions like, can you mark the right supply zone at this region? And if I'm asking this question, please just raise your hand through Zoom. If you're raising your hand, I will ask you to answer the question and you'll be able to draw on my screen. So without asking, don't use your microphone and don't draw on my screen, please. That's the only thing that I'm asking. Okay, let's just move on. So after this, price has just changed character here, swept the liquidity and started an insane bearish pressure to the main direction. But this insane bearish pressure wasn't strong enough to break below a daily demand zone here, because we know that this is a daily demand zone. But let me just show you. This is the daily demand zone that has caused the change of character, and the origin. This is the origin of the bullish order flow to the upside here at this region. So price was just reacting on this daily demand zone, and after a daily demand reaction, swept the liquidity. Here's, as you can see, liquidity inside of this demand zone, first bottom, second bottom, third bottom, liquidity, sweep of the liquidity, 50% mitigation of this demand zone, or more than 50%, it was a 75% mitigation at this line. And after a 75% or deep mitigation, price has just changed character to the upside with this movement, as you can see. So basically, what do we know about this current situation? We know that this low point right here is weak. Why is it weak? Because it couldn't break above the last recent daily supply zone. So this is the daily low point, this is a daily supply zone. So this low point is weak because it couldn't break above the last recent daily supply zone. What else do we see? We can see that this high point is weak, or this supply is weak because it couldn't break below the last recent weak low point. So basically this is weak, this is weak. Okay, we know the higher time frame perspective. We know that we have two weak points and we have a real structural high point, which is this one. So basically this structure on the higher time frame looks like this. Between this high point and between this low point, this is how the structure looks like. And I just turned on the Asian indicator, but I just turned off. Okay, but we care about the 4-hour currently because we don't really care about that much of a higher time frame perspective. We will just care about the 4-hour, the 15, 5, and the 1 minute. But we know that the demand zone, daily demand zone, has been tapped here. Liquidity has been swept into this demand, and after liquidity sweep, strong reversal had just happened. So basically, a change of character has happened here, and the strong change of character has happened also here. Okay, so the thing we can do on the 4-hour chart is to mark this 4-hour demand zone that has caused the change of character here on the specific time frame, on the 4-hour time frame. The other thing we can do is to mark the last recent supply zone for ourselves that will be targeted, for example, with longs. And as you can see, this supply zone has almost been tapped. So this supply zone has almost been tapped, but price has just reversed before tapping into this supply zone. And I remember for this scenario, I remember what has happened after this high. I mean, on the higher time frame perspective, I remember that price has created liquidity. And I believe most of you guys still remember that price has created liquidity for this supply zone on the 4-hour chart. And this has been swept. And we already know that euro is dying. So, you know, but we don't have to predict. Now, all we know and all we see is that price has almost tapped the supply zone and reversed after the almost mitigation. And after this, price has just almost mitigated demand zone too. So basically, this is the low point, this is the high point, and the higher time frame is telling us a bullish pressure. So on the higher time frame, we can see an extreme bullish pressure because price was just reacting on daily demand zone, swept liquidity into the demand zone. After liquidity sweep into this demand zone, it has reversed, caused the strong change of character of 4-hour chart. So basically the 4-hour chart has turned into bullish, and we can expect bull continuations up to this supply zone or up to some 50-minute supplies at this region or at this region. We will see. But right now on the higher time frame, we are expecting bullish continuations unless price breaks below this demand zone. If price breaks below this demand zone, we'll look for short continuations, but this is so far away. Right now, we only care about the bull continuations because the higher time frame, the 4-hour, is only telling us that hey bro, I'm bullish. Just look at me, I'm bullish. I'm telling you the bullish signs. Just listen to me, I'm bullish. And this is what we can see on the 4-hour chart. Nothing else, basically. We can see nothing else on the 4-hour chart, just this bullish pressure, and bullish sign. What should we do next? We can drop to the 15-minute chart and see how the 15-minute structure looks like, because, on the 4-hour chart, this is the low point, this is the high point, and between the low point and high point, this is just substructure on the 4-hour chart. But on the 15-minute chart, there will be a structure like this at this movement. So between the high point and between the low point, on the 15-minute chart, we will have several high points, low points, high points, low points, and we will have a completely different structure on the 15-minute chart. That's why we have to drop down to the 15-minute, because sorry, let me just switch back, because on the 15-minute chart, more likely this movement to the upside was looking like this, and at this point, price had just changed character here to the downside. This was the pullback of that character, change at some supply reaction, etc., etc., etc. So this is how the actual 15-minute looks like compared to the 4-hour chart. But we have to drop down to the 15-minute to actually see what has happened. And here are our 4-hour zones. What else can we see? Here was the daily demand reaction. Here was the daily liquidity sweep into this zone. Here was a character changing movement on the 15-minute chart after the 50% mitigation of this zone. After the character changing movement here, price is just reacting on the demand zone here, as you can see. After a demand zone reaction, after a 15-minute change of character, and after a 15-minute demand zone reaction, price has just created this huge inefficient movement to the upside, starting from this 4-hour demand zone. But basically, on the 15-minute chart, we have another demand zone inside and outside of this zone that has caused the huge inefficient movement. This isn't the origin of the order flow. This isn't the origin of the bullish order flow to the upside, but this demand zone down here is partly inside of this 4-hour zone, and this 15-minute demand zone has caused this huge inefficient movement to the upside. And more likely, this is a flip zone even too, because here, as you can see, price was just reacting on this supply zone. Here was a supply reaction. And after the supply reaction, and before the supply reaction, price has just swept this liquidity into this supply zone. As you can see with this week, created a movement, created a rejection. And after rejection, it has just flipped the supply zone and flipped the overall swing structure. This was the swing structure. This is a swing high for us. So basically, the break of the swing high and then break of the supply zone, the liquidity sweep, etc., 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 has happened from this demand zone. So on the 4-hour perspective, we have this demand zone. On the 15-minute perspective, we have this demand zone as our extreme. So 15-minute, this is the extreme. 4-hour, this is the extreme. Okay. So what else can we see? We can see, as I told you, that mainly the structure on the 15-minute will look like this, right? This is how the 15-minute looks like. And basically, price has just changed character on the 15-minute chart and started a bearish order flow to the downside. And this bearish order flow was leading down to this 15-minute demand zone because the 15-minute demand zone has been tapped. And let me just check if the 50% mitigation has happened already, but it seems like it has happened. Yeah, perfect 50% mitigation has happened. As you can see, after the perfect 50% mitigation, price has just reversed immediately to the upside. So this is the power. This is the magic of the 50% mitigation. Basically, is that if there's a 50% mitigation, there will be a reversal 90% of the time. And this rule goes on for every single zone on every single time frame. As you can see, here's the daily zone. More than 50% mitigation or 50% mitigation, instant reversal on the higher time frame. 15-minute zone, 50% mitigation, instant reversal to the upside. So this rule is still pretty strong. We still have to care about this rule. So yeah, but let's just take care of this price action region after the 50% mitigation has happened. Let's just see what has happened. We can see, we can clearly see that price has changed character here on the first place, not here, sorry. So price has changed character here on the first place, change of character to the upside, and strong change of character here to the upside again. Okay, so price has changed character on the 15-minute chart after mitigating this 15-minute zone, and basically this 15-minute zone can be considered as a 4-hour zone too. Technically not, but right now Still, there was a 15-minute confirmation, so we will consider this as a 4-hour zone because it's still in the 4-hour zone. The end of this zone is inside of the 4-hour zone, and after the zone mitigation, after the mitigation of the zone, a 50-minute strong change of character has happened. So the fractal confirmation is currently happening. So every single time frame, I'm in the 4-hour and the 15-minute, still showing us the bullish pressure, showing us bullish signs, because there was a daily demand tap, daily change of character, 4-hour change of character, higher time frame demand mitigation. After this 15-minute change of character, and more likely at this region there was a 5-minute change of character too. So basically these time frames have been confirmed that it's fractally bullish. So our time frame is fractally bullish. We will be looking for bull opportunities in this session, but we will still analyze this part of the market because it could have been changed in this part of the market. But right now the higher time frame intentions are bullish. It's pretty bullish. Okay, what else can we see? But after the character changing movement, the character changing movement has happened from this demand zone. Price has mitigated the character changing demand zone, swept the liquidity into this demand, mitigated the full body, mitigated the full demand, and reversed to the upside again, and printed some other valuable demand zones for us. For example, this demand zone at this region, or below this demand zone, we can identify the extreme, but I will rather use this one because this was a reactional candle. This was a reactional candle maybe on the extreme 1-minute supply zone here, and the huge inefficiency and the real change of characters happened from this demand zone. As you can see, price couldn't mitigate this demand zone yet, but after the mitigation, it has printed another demand zone. It has printed this demand zone, and yeah, I know what will you say? This demand zone did not break structure to the upside, but the purpose of this demand zone wasn't to break structure. It's a demand zone for different purposes, and I'm asking you, why we call this as a demand zone? Why is this a demand zone? If you raise your hand, no, stop it, don't run my screen if I'm not asking to. Just raise your hand if you like to answer. Chilling markets. And please, if you raise your hand, use your microphone. Guys, why do we call this demand zone as a demand zone? Why is it a demand zone? Anyone? Raise your hand if you like to answer, or you can't answer. Future millionaire, please.
Because inefficiency and sweep some liquidity.
Exactly, 2 criteria, but there's a 3rd criteria. Okay, I will tell you. As you can see, price has printed bullish pressure or bullish structure at this region, and this bullish structure has been changed. Basically, you can call this as liquidity in the lower time frame. It was liquidity in the lower time frame, so this could have been a liquidity sweep, and this is the less recent structural low point, which isn't part of the liquidity. This is liquidity, this isn't liquid. This is the less recent structural low point, or this is the less recent demand zone. So after this, after printing this high, price has just changed character here, because we can't call this as a change of character because this could have been just a liquidity sweep, but this wasn't a liquidity sweep. Price fed this liquidity and changed character here to the downside, and after changing character, let me just draw it with arrow movements. After changing character here to the downside, came up and came down once again, and it couldn't create a breakout structure on the 15-minute chart. There wasn't a breakout structure with body closure, but on the lower time frames there was a breakout structure. But since 15-minute is showing that price couldn't break structure here to the downside, it's still the sign of the weakness of the bear pressure. So the bull pressure is much more stronger than the bear pressure, because we know that our time frame, every single time frame, is bullish. And as you can see, it clearly shows itself that bullish pressure is always stronger than the bearish pressure. This bearish pressure is not even a pressure. It's just a small pullback, always just a small pullback. And the bullish run is always a huge inefficient movement to the upside, as you can see. So basically, price has just changed character here, and this demand zone has changed back the character here. That's why we call it as a demand zone, because it couldn't break structure, couldn't break the last recent swing high, but it has changed character here, swept the liquidity from this region, and caused huge inefficiency. So this is a demand zone. This is the less recent demand zone we will care about. And this is the second less recent demand zone that we will care about. So now that we know how does our 15-minute looks like, I will switch to the 5-minute time frame. And let me just see if on the 5-minute there was actually body closure. So on the 5-minute, price just broke about the structural high point. But after this, price just changed character here to the downside. Okay, so how does the 5-minute looks like compared to the 15-minute chart? We know how does the 15-minute looks like. We know that there's a demand zone that has caused a change of character, and know that there's another demand zone that has caused a change of character. Swap liquidity caused huge inefficiency. So, but how does this 5-minute structure looks like compared to the 50-minute structure? We know that prices broke structure here on the 5-minute chart to the upside, and after the break of structure, and of course with body closure, this candle has closed above this high point with body closure. And after the break of structure, price has just changed character here to the downside and started a bearish pressure to the downside, right? So this is the pullback of the bear run basically. And as you can see, this is the character changing supply zone. This supply zone has changed the character to the downside. And below the supply zone, we can identify a really good amount of liquidity. So this is double-sided market now, because the higher time frames are clearly showing us bullish intentions. But right now, the 5-minute chart is showing us bearish intention. Why? Because this supply zone up here has changed character here to the downside and started a bearish pressure and started a bearish order flow and built up liquidity for this character changing supply zone. So basically, we will assemble a plan for this 5-minute chart right now. And the plan will be, I will ask you what the plan will be on the 5-minute chart. If you raise your hand, you can answer this question. Please, what will be the plan for this session on the 5-minute chart? What will be the order flow we'd like to see and like to follow? Anyone who raises their hand first can answer this question. Please guys, be active, be interactive. Lip you raise your hand. Lip you. Oh, okay, you're drawing. Yeah, exactly. Perfect. Thank you. Thank you, Lipu. I don't know if I say your name correctly, but basically this is the plan. Lipu just literally draw the whole plan on the charts. It's this easy. And as I told you in the June 1st webinar about the 5-minute zones and about how I take the highest probability setups, this is the whole plan. We have zones, we have 5-minute zones, we have liquidity for each zone. If the zone is being tapped, we are waiting for a change of character, we are aiming for an entry. If this zone is being tapped, sorry. Okay. So if the supply zone is being tapped, we are waiting for an entry and aiming for the demand zone. And after demand is being tapped, we are aiming for an entry and waiting for a demand trade. And if this demand is being broken, we are waiting for a break of this demand zone. Sorry, not like this, waiting for a break of this demand, waiting for a supply, waiting for a confirmation, waiting for an entry and aiming this demand zone. If this demand is being tapped, we are waiting for a change of character and aiming for longs. Simple plan between the 5-minute zones, between the 15-minute zones, aiming for these zones, trading on these zones. It's this easy, literally it's this easy. Okay, so we will assemble the plan for ourselves. Let me just see when the session opens. So yeah, session opens in 5 minutes. And yeah, the only thing that goes against this demand zone right here is there's liquidity. This liquidity, basically, this demand zone is basically part of the liquidity, or even this liquidity too. There's a liquidity trend line built up inside of this demand zone, and this demand zone is part of that liquidity too. So there's still a chance that price will sweep the liquidity here. Sweep the liquidity here, and after a liquidity sweep, it will reverse to the upside, or it will sweep the liquidity, tap this demand zone, and reverse to the upside. It happens if the supply isn't being mitigated first. If the demand is being mitigated first, or if this demand is being mitigated first, we will aim for this supply zone. If the supply is being mitigated first, this supply is being mitigated first, we will aim for this demand zone or this demand zone. So yeah, there's still a chance that we will see a sweep of this liquidity line right here, sweep of that liquidity. And if a candle closes above this demand zone, then we'll be able to take longs up to this supply zone because the liquidity sweep has happened. And if the candle closes below this demand zone, we'll be able to take shorts down to this demand zone. So basically, we have a plan for every single scenario. We have a plan. What happens if the supply is being tapped? What happens if this demand is being tapped? If this demand is being tapped, what happens if the liquidity is being spent? What happens if price closes below this line? So yeah, we have a plan for every single opportunity that could show up on our screen. So let me just switch to the 1-minute chart and start the whole session basically. Okay, so here we are. We have zones, we have bus stops. This is the first bus stop. This is the second bus stop. We are waiting, patiently waiting sitting on our hands. Not sitting because I have to manage the backtesting session, but let's see what happens. Okay. Seems like the demand will be tapped first, and demand tap has happened. In this region, or at this price action region, I would rather wait for the 50% mitigation because there's liquidity. And if there's liquidity, this is still part of the liquidity. So if price changes character here, this could be easily be part of the liquidity, this character changing movement, which changes character here to the upside, because this is the character changing. I mean, don't draw on my screen, please. Thank you. So this could be part of the liquidity. If price changes character here at this region, so I would rather wait for the 50% mitigation. Okay, 50% mitigation has clearly happened. Let me just check. Yeah, 50% mitigation has happened. Let me just zoom in. Let's see what happens after. Price is reacting. Okay, and changing character. Okay. So I will just close this zone. Price is mitigated more than a bit more than the 50% of this zone. And after a 50% mitigation, it has changed character here to the upside. Here at this line, here's this first character changing line, and character changed here to the upside again and created liquidity for the longs, for the upcoming longs. So here's perfect double taps. First tap, second tap, build up for the upcoming longs. Okay, let me just check the 5-minute structure. If this is liquidity, this could be relatively liquidity. We could call this as a liquidity trend line, first touch, second touch, third touch, perfect liquidity line. This could be liquidity. This could be easily liquidity. But honestly, guys, in live trading, if there will be liquidity creation for the 1-minute zone, character changing zone, which is this one right here, this is the extreme of the movement. There's inefficiency between this candle and this candle. And if price creates liquidity for this zone, I would go for longs, and I won't wait for the sweep of the downside liquidity. So if there will be liquidity for this 1-minute character changing zone, I will wait for, I will set a limit order on this demand zone. But if there won't be liquidity for this zone, I won't set limit order on this demand zone. So let's see what happens. Because the reason I'm not waiting for the sweep of the higher time frame liquidity is that every single criteria is on my screen, right? 50% mitigation, pro trend. Basically, it was a V-shape recovery too, because mitigation has happened on the 50% and immediate reversal. Strong change of character too, even if it's a pro trend. Higher time frame liquidity sweep has happened here to the downside. So I won't count the other criteria. Basically, everything is in front of us. This is a really good criteria trade, and if there will be a liquidity creation for this zone, I will wait for mitigation of this zone and entry. Yeah, there's a flip zone too. Actually, there's a flip zone too. Price was reacting on this zone, and this is the flip zone, but seems like price is already building up liquidity for the extreme. So yeah, let me just see. The flip could easily be liquidity. Yeah. Flip is liquidity. Yeah, liquidity has been built up. Double bottoms. Here, as you can see, built up for this zone. Okay. So in this case, I would go for this. I would simply go for this. I will take the risk. I will set a limit order on this zone because, you know, the less needed criteria is there. Liquidity has been created. Liquidation. We can aim for the liquidation. We can aim for a reversal on this zone. This could be a solid plan, but this could also go wrong. This overall higher time for liquidity could be swept. But, you know, criteria are on our screen. We have to pull the trigger. If criteria are on your screen and only one thing is against your criteria, so basically there are 7 or 8 criteria for this trade, and only one thing is against this trade, is that the higher time frame liquidity is still there, I would rather recommend you to go for this trade. And as I said, I will aim for this 5-minute zone. Aiming for this 5-minute zone. Okay. Still creating liquidity, as you can see, still creating liquidity for the longs. So this is one more criteria. Basically, this is liquidity creation for the longs. One more criteria on our screen. Let's see. Almost. Okay. That was fast. So this is a loss. Let me just close this zone. So that was a fast loss. Seems like price needs to sweep liquidity from the downside. Okay. So there's a liquidity sweep. Liquidity has been swept, and okay, immediate huge reversal. Let me just, okay, guys, we took a loss on this trade. Every single needed criteria was on our screen, but we still took a loss. Why? Because one higher time frame liquidity was against our trade. But still, you still have to keep repetitively executing these setups, because if your criteria are on your screen, you have to press the sell/buy button, because criteria are there. One criteria is against your trade, but 8 are next to your trade. So basically you have to keep executing, trading, banging your edge. And this is your edge. This was our edge. Our edge has just appeared on our screen and the loss has happened. So the only thing I'm caring about is that the liquidity sweep has happened clearly, because as you can see, the liquidity from below this demand zone has been swept and immediate reversal has happened. So price was coming down, swept the liquidity, and after liquidity sweep and after the stop losses have been converted to new orders, price has just immediately reversed to the upside with a huge inefficient push. So at this region, price has collected all of the stop losses. All of the stop losses at this region have been converted into new orders. New orders have been placed into the market after the old orders have been swept and caused this huge inefficient move to the upside, which has caused a strong change of character here and here. Okay, so basically, let me just see. Let me just ask you, what do we have to do in this situation? What are we waiting for? What do we have to check? Raise your hand if you'd like to answer, please. What do we have to check? What do we care about in this situation? Please, chilling markets, if you're raising your hand, please just use your microphone. Guys, please be active, be interactive. I'm asking something, please try to answer. What are we waiting for right now at this situation? What are we currently waiting for? What do we wait for? What do we want to see? Where do we have to switch? We were talking about this before assembling the plan. I just literally told you the possible scenarios. I just told you the possible scenarios. What are we waiting for? Thank you, Adam FX. Thank you. Thank you. Finally, the good answer. I just literally told you this 10 minutes ago. We have to see if the demand was broken or not. And as you can see, if I switch to the 50-minute chart, this 50-minute demand zone wasn't broken. Price couldn't break below this zone. So basically, this was just a pure liquidity sweeping candle, liquidity sweeping wick. All of the liquidity from this region have been swept from below this demand zone with this candle. And this candle has closed above the last recent demand zone. As you can see, this candle has closed above. So as I told you, basically, we just assembled this plan. We just created this plan that if price sweeps the liquidity and closes above this demand zone, we'll look for longs. If price breaks below this demand zone with body closure, we look for shorts down to this demand zone. And the first scenario has happened because price couldn't break below this demand zone with body closure. So we will have to wait for a long confirmation. We will have to see a good long entry. For example, a flip. As you can see, price is currently reacting on this extreme supply zone, or not even extreme supply zone, the less recent valuable supply zone. Price is currently reacting on this supply zone. Let's see if the flip happens. Two reactional candles, as you can see, first reactional candle, second reactional candle, and it seems like the flip has happened. Perfect, perfect flip. Okay, so in this scenario, as it lines up with my plan, I would look for long entries. Why? Because I assembled the plan. I created the plan before the session started. And as the plan says, if price sweeps the liquidity from below this demand zone and can't close below this demand zone and closes inside of this demand zone, I mean the 50-minute sweeping candle, then I will look for long opportunities, because this has been explained in the webinars too, right? If price sweeps the liquidity from below a 50-minute demand zone, so there's a 50-minute demand zone and there's liquidity below that 50-minute demand zone. So if price sweeps the liquidity from below this zone and the 50-minute candle can't close below the 50-minute zone, then we'll be able to instantly look for 1-minute entry opportunities. And this is a good entry opportunity. This could be a good entry opportunity because a flip has happened. Basically, a conversion between the sellers and buyers has happened here. This was the last recent valuable supply zone for us. This was 1 second liquidity for this zone. Prices tapped this zone and showed reaction. Couldn't break above this zone. Couldn't create any impact. And showed reaction. This was the last reactional candle, and the flip of this zone has happened from this candle. So basically, higher time frame tap, higher time frame liquidity sweep, V-shape recovery after a liquidity sweep, flip of this zone, pro trend, liquidity creation. So here's the liquidity to take. This is a liquidity to take for us. We can aim for this liquidity, and there's the higher time frame liquidity to take too. Inefficiency, huge inefficiency. So basically, this is a 7 or 8 criteria trade once again. This is a 7 or 8 criteria trade once again, because I just told you the criteria. This will be a good trade. This will be a good protein trade, and I will take this trade no matter what. I don't even need a liquidity creation for this trade because enough liquidity has been swept. Just imagine, price has just swept huge amount of liquidity from below this demand zone. This was a higher time frame liquidity. It doesn't have to sweep more liquidity from this region. It doesn't have to create liquidity because huge amount of liquidity has been swept from here. And if this huge amount of liquidity isn't enough to reverse price to the upside, then this small amount of liquidity won't make any difference. So I won't need liquidity creation for this. I have 8 criteria for this trade, and I will go with the flow. I will just simply go with the flow, and I will set a limit order on this flip zone, on the 50% of this zone, and simply aim for the zone that I told you that we are waiting a reaction. We are still aiming for this zone. Sorry, let me just remove these and mark this as liquidity here, because perfect liquidity has been built up here on this is the lower time frame liquidity to take. This is the higher time frame liquidity to take. So let's see. Okay, more liquidity has been formed. Okay, tag in. We are in the trade. Perfect. And basically, just a question. Can we set this to break even? Let me just write it here. Can we set this to break even? Yeah, we can. Thank you for your answers. We are setting this to break even. So price just basically broke about this last recent high point with even body closure, a small body closure. So I will set this to break even. I will remove your drawings. Thank you, guys. Remove your drawings, please. So this trade is currently running in break even. More liquidity has been built up, as you can see. More liquidity. Okay, let me just find the next reason zone about the liquidity, because if I see this amount of liquidity, this is just a tip. This is just a tip, guys, that if you see this amount of liquidity, for example, on the short side, for example, on the long side, no matter on what side, if you see this amount of liquidity, try to find the next recent zone above/below the liquidity. I always do this. This is just a small tip from me to you, that I'm always looking for the next recent zone above/below the liquidity. And currently, this is the next recent zone above the liquidity, because as you can see, let me just analyze this zone. Actually, this was a flip zone, because price has just created a flip from this region. As you can see, here was the flip of okay. So here was this last recent supply zone. Price has reacted on this supply zone, and from this demand zone, price has flipped this supply zone. Price has just reacted on this demand zone and changed character here to the upside after reacting on this demand zone. And here was the character and changing demand zone, and price is reacting on this demand zone but couldn't show any impact. And from this supply zone, price has just flipped this demand zone. So this is even a valuable zone. This is a valuable zone with inefficiency and liquidity below it. So I will mark it, and I will wait for a reaction on this zone. And if this zone breaks, more likely I will aim for more long opportunities up to this supply zone, because basically if price can break above this supply zone without reversing to the downside, so if price breaks above this supply zone, then more likely this supply will be tapped up here. Why? Because if this amount of liquidity can't reverse price to the downside, and this amount of liquidity can't reverse price and actually reverse the trend, then I believe if this supply zone breaks, then we'll see the sweep of this upside liquidity too, and the tap of this supply zone, because huge amount of liquidity has been swept on the downside, huge amount of liquidity has been swept on the long side, and this higher time frame liquidity is much more than this lower time frame liquidity. And if this higher time frame liquidity could reverse price to the upside, and if price can break above this supply zone after sweeping the lower time frame liquidity on the short side, and if price can flip this zone, then I believe we'll go up for the higher time liquidity and the supply tap too. So this is the plan currently. Let's see how it develops. Okay. Maybe the liquidity has been swept. Maybe the liquidity has been swept, but okay. Okay, maybe this trade will hit break even. Price has just created a, no, it hasn't created a change of character yet. This demand is still holding, or this demand is still holding, or actually this could be just another long opportunity right here at this region, because liquidity has been built up for these demands, as you can see. So this could have been just another long opportunity. Okay, I just realized that this is a really good opportunity for a continuation trade. Guys, I wouldn't open this position in live. So if I were trading in live, I wouldn't open this position. I'm just opening it. I'm just testing it because it's a backtesting session. I'm just testing if it works out because from this demand zone, prices actually swap the liquidity. Technically, this demand zone that did not directly sweep the liquidity, but this was the origin of the liquidity sweeping movement, because as you can see, here was liquidity built up. This demand zone has caused more liquidity here, and from this demand zone, prices just swept the liquidity, or from this demand zone, prices just swept the liquidity. But also, this demand zone can be used because it's part of this liquidity. So basically, this liquidity line right here and this demand zone has been built up for this demand zone down here. So technically, this could be a good entry opportunity. But once again, I wouldn't enter in this trade in live trading. I'm just testing it out for the backtesting session. But I would enter in this trade in this long opportunity in live trading, and I would have entered in this long opportunity in live trading too. But I will skip on this one. So let me just see how it works out. Perfectly. Okay, it works out perfectly. And this supply is giving us a reaction. Let me just close these zones because this could be annoying for you. This supply is giving us a reaction currently. So the plan still goes on. Liquidity has been swept, supply has been tapped. The plan still goes on. If price can create a change of character here to the downside, then this trade will hit break even. If price creates a change of character here to the downside, then we'll aim for this short opportunity down to this demand zone. This demand zone. If this happens, we'll have a good short opportunity. If this zone is being flipped, so if this supply zone is being flipped, then we'll have a good long opportunity. So we have two scenarios once again. First trade break even, second trade break even, good short opportunity. Second option, flip of this supply zone, continuation demand zone, good runner, good runner. So these are the two options for us. Okay, still reacting. Flip, close above. Okay. Wait a minute. As I remember, I even took this trade in live trading. Yeah, I remember I took this trade in live trading. I did open our same position in live trading too. No, I didn't open this position. I didn't open this position. I didn't open this position, but I opened this position on live trading. So yeah, I took this trade in live trading too. So yeah, this is a small spoiler alert, but yeah, I took this trade in live trading. I just remember. And I did set a limit order on the 50% of this candle. Yeah, because I had the same narrative. Yeah, guys, this is actually pretty funny because you see that I'm building the same narrative in backtesting sessions and I'm building the same narrative in live trading sessions. So I just had a narrative in that live trading session, which I was following. That narrative have played out in the live trading session because this trade will play out. I remember for this trade. And I built up the same narrative in this backtesting session, and that narrative is playing out. This is the importance of having a narrative. If you are having a narrative, if you're having a plan for every single scenario, you'll have success in the market basically. So yeah, I know that this trade will play out. Yeah, tag. And I know that this supply zone up here will be tabbed. But as I remember, there was another entry opportunity because liquidity will be formed for the supplies demand zone. But let me just explain. And let's just see how price moves on and develops. Yeah, tap of that demand happened. Okay, in this situation, price is clearly forming liquidity for this zone, as you can see. Price is just forming liquidity. Okay, there's the perfect double bottoms or liquidity trend line built up for this zone. And as I told you in earlier sessions, the only way when you're having a 50% entry, the only way when you can count on a 50% mitigation on a 1 minute zone, when it has been already mitigated, when there's liquidity inside of this zone. So there's liquidity can be found inside of this zone. As you can see, perfect liquidity can be found inside of this zone because zone tap has happened, and here's the liquidity built up. Basically, this liquidity is inside of this zone. As I told you earlier in webinars, in recaps, etc., as I'm telling you now, the only scenario when you can expect on a deeper or 50% mitigation on an already mitigated 1 minute zone when there's liquidity inside of this zone. And now there's clearly liquidity inside of this zone. So we can expect on a deeper mitigation or 50% mitigation of this zone. And if the 50% mitigation happens, we'll have another good entry opportunity. Let's see if it will be a 1-to-5. Yeah, it completely reaches the 1-to-5 ratio. Let's see. Yeah, liquidity sweep happens. Zone tag, continuation of the main order flow, and TP hit on all trades. And session closed. Yeah, not here, here, session closed. And reaction on this supply zone. So basically your plan works out. I just want to check if this supply really gives us a reaction, because liquidity has been swept. I didn't even notice the price has built up more liquidity at this line, but liquidity has been swept into this supply zone. After a liquidity sweep, it has just reversed. It was literally it was the base plan for us. We were just expecting on this plan that if price mitigates this demand zone, we had scenarios. If price mitigates this demand zone, we have a first scenario that price will change character here or sweep the liquidity to the downside. Character changing has happened. We took a loss on the trade. Okay, we were following our plan. Second scenario has happened. Price has swept the liquidity. For this liquidity sweeping scenario, we had two different plans again. If price closes below this zone, then we'll have a short opportunity. If price closes inside of this zone and just sweeps the liquidity, then we'll have a long opportunity. Okay, if this happens, we'll aim for the next recent 5-minute supply zone that's above the liquidity. This is the extreme zone above the liquidity, and we had this in our plan that we were aiming for this supply zone. If the supply is being tapped, which is unfortunately outside of the session, so we are not trading after the supply is being tapped because the session has just closed here. But if price taps this supply zone, 50% mitigation has happened, as you can see. And if it changes character, then we'll aim for the deeper demand area. Basically, we had this whole plan. We had this planned out. And this is the beauty of trading. You have to build a plan every single time, because if you are building a plan, there couldn't be surprises for you. There's no surprise that could actually happen to you because you have a narrative for everything. And as you can see, this is the perfect example. This was the perfect session. And yeah, I was a bit happy when Chilling Market said at the end of this beginning of the session that this was a crazy session, and he backtested it minutes ago. And yeah, this was actually a pretty good session. This is a pretty good example for the importance of the plan. This is a pretty good example for the importance of the plan, because that's why you have to build a narrative before every single session. That's why you have to keep yourself adaptive. That's why you have to adapt, because, you know, basically trading is all about adapting. You had a plan. Price action was at this region when the market opened, and you had a plan. And you have to adapt based on that plan. If the first plan happens, you will adapt on that first plan. If the second plan happens, you will adapt on that plan. If the third plan happens, you will adapt on that plan. Basically, this is what trading is all about. Let me just count the total risk-reward ratios together. This was a -1. This was a, I just counted as 12, plus 12. Okay, no, plus, I mean, yeah. This would have been 11, but I won't count this because I wouldn't have taken this in live trading session, just in a backtesting session. This would have been nearly a 7 plus 7, and this would have been nearly a 6. So plus 6, it's 13. Yeah, it would have been a plus 24 risk-reward ratio session, but with this 11, it would have been a plus 35 risk-reward ratio session, simply by following our plan, simply by having a narrative, having a higher time frame narrative, and playing on 5-minute zones. Simply by playing on 5-minute zones, we could achieve this kind of a risk-reward ratio. It's literally this easy. But trust me, guys, in Wednesday's session, it will be much cleaner, because in Wednesday's session you will have the trading plan builder PDF file and the webinar too, which will actually tell you the criteria, when to use the criteria, when not to use the criteria, what base criteria you need. And basically, if you will take a look back at this session after Wednesday's session, you will see that I've used the criteria based on that session I will host. And you will see, actually, this is a homework, guys. After this session ends, and after I host Wednesday's session, please just take a look back at this session and track all of the criteria that has happened on these trades. And you will see that basically I'm using the same base criteria over and over and over again, and using the same variable criteria over and over again. So yeah, this is a homework. Let me just read the chat. Wow, this is a perfect day. Poor Joseph needs to just go to bed. He's dropping. That day was enough for the whole month. Yeah, actually, this day is just enough for the whole month. Just imagine booking 35 or even 24 or 35 risk-reward ratio in a single day. It's enough for a whole month. Bro, the 4th trade was a 1 risk-reward trade, I remember. Why don't you enter most of these trades in live? Because in live trading, I'm being more disciplined. I'm having a trading plan. and I'm basically opening 3 or 5 trades a week. And I wanted, guys, I'm not taking this many trades in live session. I'm not taking this many trades. I'm not taking 5 trades in a single day, in a single New York session. I'm just aiming for the highest probability setups. And I remember that in that session, when I was live trading, I had that narrative that, okay, if price reverses here and closes above this demand zone, there could be a good entry opportunity to the long side. But I will rather wait for this supply tap here and flip off this supply, and I will rather wait for the liquidity sweep, because I just want to take the highest probability setups. These are really, really good setups. These are 8 criteria setups too. But for me in that session when I was trading live, this was basically the highest probability setup that I could take. You risk 1% per trade? Yeah, mainly I do. So yeah, guys, basically this is the end of the session. I believe it was a pretty good session once again. And yeah, if there are any more questions, I will just stop the recording.